Hello guys, this is fairbinaryoptions.com, and I know that this is not let's say the most traded currency pair there, but it is following a pattern that we want to trade, and this is a rising wedge. Like any rising wedge, this is falling, and if it is falling, we want to buy put options. What should be the expiration date? Well, the expiration date definitely is going to be this coming Friday, so end of week expiration date. This is Thursday, as you can see. We had the Reserve Bank of Australia this week. We also had the retail sales in Australia, but we also had the IV PMI in Canada. And keep in mind that this is across the Australian dollar, Canadian dollar, and like any cross, it is being influenced by the flows that are pouring in or out of the majors. I'm talking about the Aussie here or the loonie, so Australian dollar, US dollar, or US dollar, Canadian dollar. What is the wedge here? Well, this is, first of all, it is a 1 hour chart, so don't look for major breakdowns. But because triangle broke out of a possible, I would say, flat here, this to be A, B, C, so this to be the C wave here. So this to be the previous corrective wave, something like this. So this would be our flat, let's say. And then I would say that this is kind of an A wave to the upside of a bigger degree. Let's make it something like this. And then a B wave here in the form of an A, B, and a C wave. As you can see, let's say the C wave of a lower degree out of this flat fails to take the previous lows in the flat, and that makes the pattern to be even more powerful. But then to the upside, we are looking for a possible five-way structure. This is our five-way structure that we're looking for. It is coming in the form of a rising wedge, and this one comes with a first wave extension. So this is no terminal impulsive move. What I'm trying to say is that in a first wave extension, the most time consuming is the second wave, and usually the third wave relates with something like 61.8 when compared with the previous wave. And then the fifth wave relates with something like 38.2 when compared with the length of the third wave. So even though it seems a bit complicated, it's not that complicated. And this is how an impulsive move or a first wave extension looks like. And if you take a trend line from the end of the possible first wave till the end of the possible third wave like this, let's change the color so that we actually understand what we're doing here. And then you take another trend line from the end of the projected second wave to the end of the fourth wave like this, and there you go. This is our wedge, rising wedge. Look at the price, where price is now. Well, price is just testing the 2 to 4 trend line. In any wedge, the most important one is the 2 to 4 trend line. Why? Because by the time it is broken, first of all, it needs to be a clean trend line. By the time it is broken, you can incorporate the time element into the analysis, in the sense that all you have to do is to take a vertical line, measure the length of the wedge from the beginning till the possible end or the projected end, and then project that moment of time on the right side. And by the time you're doing that, you already have an educated guess regarding both the level and the time to validate this pattern. We are looking for 50% retracement out of this level to come in less than the time taken for the whole wedge to form, basically from the lows to the highs here. 50% retracement level is, as you can see here, somewhere around 0.9820, 0.9830. When you trade binary options like we do here, we want to buy put options, but we don't need for price to travel for hundreds of pips in order for the payout to come. I'm talking about 80%, 88%, 79%. That is usual for binary options, but we only need for price to be lower or bigger than the striking price by the time we have the expiration date. And in our case here, we're buying put options, and if the put options are if price is going to be lower than the striking price by the time the option expires, that would be next Friday 21 GMT or tomorrow 21 GMT, we're going to book a nice profit. And therefore, let's write on the screen for everybody to know and understand. We are buying put options with end of week, or basically tomorrow, Friday, expiration date. And that would be our educating guess, or the logical thing to do for this rising wedge. Keep in mind, the rising wedge is falling, and therefore we're buying put option. Thank you very much for being here, and keep in mind, this is fairbinaryoptions.com. All our analyses are possible due to the help of our sponsor, Lionel.